Hey guys, on the 2nd of June, nighttime in the US, President Joe Biden has announced some good news. He said we have avoided an economic crisis.
We averted an economic crisis, an economic collapse.
That's good news for the world economy and the stock market moving forward. So, how did stocks perform over the past month? Let's have a review on the stock market performance. Let's open up the charts using TradingView to have a look on the key stock markets that I'm looking at. Beginning with the S&P 500 from the 1st of May to the 2nd of June, the S&P 500 is up 2.57%. At home, FBN KLCI is down 3.14%, Singapore Straits Time is down negative 3.4%, and the Hang Seng Index is down almost 5%. So over the past month, only the S&P 500 is up while the rest were down. So that is why the US market is still the best place to put your money in. But looking at a year-to-date perspective, it's a similar trend. S&P 500 is up almost 12%. Straits Times Singapore down 2.5%. Hang Seng is down almost 6%. And at home, FBNKLCI is down 6%. Similar trend. S&P 500 still the best index. I mean, of course, if you put in Nasdaq is even higher. Looking at the charts starting from the S&P 500, the S&P 500 is now officially on the bull market as defined by professionals and is still on a very healthy uptrend. As you can see, it's making higher highs and it's making higher lows. So the uptrend is still intact. And previously I've mentioned that the S&P 500 is meeting a point of resistance. It seems like now it has broken out of that resistance. So we can see more upside potential from there. But do take note that because it's now far away from the moving averages and the resistance level is highly stretched at the moment. So there's a possibility that it could pull back to this resistance level, which is now a support, then it might move further from there. But I might be wrong and it might just continue from there to new heights. Moving on to Hang Seng Index. The Hang Seng Index looks like it's on the downtrend right now. Previously, I mentioned that it was forming a triangle pattern, but it seems that it's broken down of that. So it seems that it might go down further, but it made a reversal candle over here on the last trading day on 2nd June. So it might be a reversal sign that it could continue upwards, but trend is still stronger. So if the trend doesn't reverse, then I can expect the Hang Seng to go down even further. Singapore Straits Time, similarly, nothing exciting. It's always on a tight consolidation pattern, but in May, the index has actually dropped a little bit. So it might continue down from there to reach the next support level, or it might just continue upwards. But anyhow, Singapore stock market is very stable if you want a stable dividend play. Moving on to home, FB and KLCI, still the same findings from last month is that it's always on a downtrend, sadly. It made a triangle pattern, a really long-term triangle pattern, and it has broken down from there. So there's not much good signs for the FBA KLCI as compared to the Hang Seng, because the Hang Seng made a reversal candlestick pattern, but the FBA KLCI still no signs of reversal. So we just hope it plays out well for the local stock market. That's why the US is still the best market to invest in. So any notable mentions in May? Yes, Nvidia. Nvidia is up a lot in the month of May, which made me to make this short video about whether you should buy Nvidia right now. And not just Nvidia, basically a lot of tech stocks were up a lot in May, like Google, Amazon, and even Adobe. So it's a good time for tech. But should you buy right now? Well, you can always watch the short video to know more about it. Now, I want to bring up Forex because in the past month, Forex market has been bad for the Malaysian sector. We see the USD going up from 4.4 to 4.5, even 4.6. We see the Singapore dollar going up from 3.1, 3.2 to 3.4 even. Hong Kong dollar, it was at 0.56, it's not at 0.58, it reached even 59 previously. So sadly to say, if you are Malaysian, you're using ringgit, you want to invest in foreign stock markets, the currency isn't at our favor at the moment. But for those who have foreign currencies, who are earning in foreign currencies or even invest in foreign currencies, then yeah, we are happy, at least for now, right? And it seems like the uptrend, it is very strong. I do hope that it doesn't reach newer highs because it's not a good sign for the Malaysian ringgit. But looking at chart patterns, it could happen in the future because in the long term, forex market is always on the up for foreign currencies against the ringgit. So sad to say that we are in a really weak currency situation. And lastly, what can we expect in the month of June? As President Joe Biden put it, we have already averted an economic crisis. The debt ceiling issue has been resolved. So we don't really foresee any bad things to happen from there. So perhaps the S&P 500 and even the other indices in the world could see reversals or even continuing uptrends from there. So yeah, it's a good time for stocks at the moment if things turn out better. But anyhow, any bad things can happen suddenly. Like maybe it doesn't pass into law, so it could really crash the market. Or Fitch, S&P, Moody's, or any of these rating agencies, they go and downgrade the US rating. So if that happens, then we can see the stock market crashing again, like how it was in 2011 when S&P dropped the US rating. So a lot of things can happen, but looking at chart patterns, at least for the US, it seems like things are bright and we can expect higher gains from there. The rest of the world, at least for Hong Kong, Singapore, and Malaysia, I'm not very sure. I'm not very confident looking at the chart patterns. But does it mean that you should buy now? Well, that's up to you. Considering that prices are really high right now and Forex isn't doing well, there's a lot of risk to manage over there. All right. So I hope that this has been a very quick and useful review for you in the month of May and what we can expect in the months moving forward. Things are looking great. Perhaps we can see good returns for the rest of the year. Thanks for tuning in, and I will see you in the next one.